On the market itself first, what do the charts tell you where are we going from here?
Well, Scott, my thinking is that we can still trend higher into the middle part of next week. And then there is a good likelihood that we stall out and begin a correction. And so the back half of September, I do expect to be down. Markets likely bottom out in the month of October and should trend higher through the seasonally bullish 4Q period.
How far down do you think we go? The Minard down, the Scott Minard down of 20% by mid-October from here, or what?
It's really, really difficult to put 20% on a pullback. My thinking is we will likely undercut this week's lows, but we should not get down under June lows for the year. You have to remember that sentiment right now is really as bearish as we've seen since June, and we still have a lot of investment managers that have been caught completely off sides, and everybody's talking the same playbook that earnings revisions have to come down and people are on the sidelines. And so, yes, there is some opportunity in some defensive sectors, but my thinking is it's going to be very difficult to pull back to new lows right away.
But why are we going to go down next week towards the end of the week? What's the catalyst there?
Well, I don't know if there's a fundamental catalyst. My thinking is, the CPI might come out better than expected. That could provide a little bit of a boost. And there's a blackout period, so the Fed really can't discuss that until the meeting. I'm looking at cycles, and the middle part of the month has been very important over the last 5 out of the 6 months. Markets peaked in mid-August, they bottomed in mid-July, they bottomed in mid-June, they bottomed also in March and May. So there's been an incredible amount of timing towards the middle part of the month, and some of the composites that I use actually trend lower starting next week into early October. So while I'm bullish this week, and yes, we are in an era of heightened volatility. Markets can go up sharply for now, and my thinking is they can drop. But my thinking is it's probably going to be 10%, and it's very difficult to put a real number on the extent of what the pullback should be. But that will ultimately end up as being a buying opportunity in October. Midterm election years, that tends to be the best part of the year. With inflation starting to come down, as Tom Lee and others have commented on, gas prices have fallen 30% in 3 months. That's not being reflected in CPI data. So we are going to see gas prices falling down, which actually might create a more contentious midterm election. And this wall of worry likely should fuel market gains between October and the end of the year.
You talk about tech a lot. What's the importance, if any, of financials and healthcare outperforming at tech's expense? That can't be viewed as a positive sign. I wouldn't think so, or is it?
Tech is performing very well today. My only point there is that these sectors have been able to come together to really buoy the market at a time when tech has been underperforming. So it's a positive to see, financials and healthcare, that's 25% of the broader market, and those are up over 3.5% this week. So when you see a broad-based rally in industrials, discretionary, healthcare, tech, financials, great groups, and on any downdraft, my thinking is, these groups can come together and probably cushion the market to not decline as violently as what, everybody is expecting.